Good morning, West Pacific Market Analytics, and it's Glenn here with your West Pacific week. I want to get into on this holiday shortened week to get this update ready for next week and have it out here on Saturday so you can have time to digest it here over the weekend. Making a lot of changes, revamping a lot on the YouTube channel, revamping a lot on the Twitter channel, and of course revamping and doing much growth on the Discord member site. Now, if you're interested in joining my Discord family, I thank those that have come on board recently. Very, very happy with what they're seeing, and I've had some extremely solid comments and feedback. And to those of you listening that have made those comments over there, I appreciate it. Again, that's at destinytrading@gmail.com to get a hold of me about our Discord membership, or if you want to bring me in on a podcast, I'm always very open to doing a podcast. Would love to talk to you about that. Let's not waste time. We got a lot to get into here. So let's start with the disclaimer. Please read it. These charts are for educational and entertainment purposes only. Trading is risky, and it's always your responsibility to manage that risk. All right. Let's jump right into it here. Now, where do we go? Let's start here. Well, let's not go commodities. Let's start over here. Let's jump around a little bit on some of the stuff we've been looking at here. Let's start with some top internals here. So we're looking at a few things here I wanted to share with you. Let's get into some of those. Start with this right here. Let's start with this idea of inflation, because I think inflation breaking down is going to be very key to what's coming up ahead. So you can see we got a very nice looking megaphone top up here. Inflation is this red indicator here. And inflation is very toppy. You can see the trend breaking. You can see velocity is coming out now. So we've got these kind of bursts, because remember, inflation is a monetary phenomenon. It's also a greed phenomenon. There's those that don't want to agree with that, but first and foremost, of course, it is a monetary phenomenon, because the Fed does control the mandate, and they can control inflation or deflation at will. I mean, that was Charles Lindbergh when he wrote his famous paper back in 1913, brought that fact up. We gave up the right, and once we gave up the right to print our money, whether or not we want inflation or deflation. So that's just how it is. Maybe one day the youth can bring it back and fix this whole system, but for now we got to work with it. So here's that megaphone top right up here. We're going to watch it. I want to see this breakdown. We got a pretty nice triple hit up top here. We got kind of a triple hit down the bottom, so it's a yin and yang situation, but for sure it's not going to break out. But we're going to want to see this start to have some sort of an aggressive move down. We definitely need to have inflation and this particular model going into deflation occurring before we can get too excited about a bigger move down. Now, that said, we can see here we're looking at the XLK here, which of course is primarily Apple, NVIDIA, and Microsoft. Really nice how they got this weighted, right? 15% for Apple, almost 14% for NVIDIA, and 12.72%. So we've almost got, we're upwards of 38% here just in the technology sector. And you can see the three candles here trading sideways. You can see the indicator of XLK hit the neckline perfectly and held it right here. But we can see velocity is coming out of tech. We're priced correctly because we're priced within trends. So we're still seeing the trend break. So we're kind of grinding around here. Now that doesn't mean we can't burst right down here, because we can. Because you see we can trade in the trend and velocity. So this is a pretty weak structure. There's nothing pretty about it. And if we look at the global technology picture here, same situation. We're priced right to trend now. We can see the trend coming out here. We can see the velocity rolling over at last. You notice we're getting negative velocity now. Notice back here, negative velocity, negative trend, and then we had that move down in 2022. So everything's ripe for the continuation of the move lower. We're going to continue to watch that. We want to see how that shakes out. Here's a technical model. We can see it's still breaking very cleanly right down the trend. We still got the signal breaking down. You see the same looking setup over here, right? Velocity coming down, trend coming down, indicator coming down. So basically what we're looking at is everything is looking just fine when we look at some of those top internals. Let's go over to the weekly signals here. Nothing's really changed. I added some stuff in here. yesterday for my members to look at. Here's the SPY SPX weekly trend. We can see still breaking lower. Now what's going to happen here is we're going to have to see this gate right here go from open to close. Close would be where it goes negative here to get below the gate. So we're still well above the gate. This testing of the gate would put us right at about 4,600, which is kind of where we're looking at. We're getting very cautious at that 4,600 level. Now, if this gate were to close below, that would change this picture altogether. But we're still priced up here in the V channel. We got some work to do, so we want to see, how that sets up. Again, don't think about higher. You can see here in our compact top, we've got this being the compact advancing we're looking at here, advancing issues within the compact. You can see we got our momentum top all the way back here in 20, 21, 22, right? And there's our momentum top all the way back there in time. So remember, we're looking at 5 years here to complete this momentum top and now to complete the velocity of this massive 40-odd trillion in printing. And we've got the velocity top. Velocity is broken down. You see that right there? Look at that. This is compact advancing, right? And you see the velocity coming out. You see the trend coming out, trend right here. You see price right there in it. So, there's nothing pretty here as far as that. We're going to have to see how quick it wants to break. Now, we can see this velocity signal here in the momentum flows. It's acting very, very nicely. Let's go over and look at that closely. You can see us tumbling right down. So here's the price. SPX bounced back up because you notice our indicator here. This, again, is the weekly compact signal, right? So we can see it came down, it bounced up. You see how the market came back up to the trend. We came down too deep. We came back up. The red indicator's up here. We're priced right here. We're ready to continue downward next week. Looks very ripe. Now, we're going to have to follow this down. We could have another spike deep and then bounce back up. We'll have to see how it sets up. So it looks pretty good. It really looks good there. I really like what I see. We're going lower. And it could be, we'll have to see how deep this wants to go. Again, I'm talking down around 42, 4,600, but it could go deeper. So we'll see what it wants. Here's our SPX flow model. You see the red still above. Again, same idea. You notice how it came down, bounced up, came down, bounced up. So it's coming back to trend, but you notice velocity continues to drain, trend continues to drain. We remain in a bearish picture as long as trend and velocity continue to drain. Let's see what else we got here. The signal's still going. You notice that we still got the signal fired off, so the signal's still on. Here's where the signal turned off and we rallied back up. We had these grindy signals here, and we're just getting the velocity rolling over up here. So this looks a lot like the beginning move in 2022. So you can see this is just developing right now. So this is we're going to watch very closely, this particular SPX signal model. It's a really interesting one. Let's just jump around here a little bit. Let's go over into the global situation. I think I want to go there first. So let's just look here a little bit at this global situation. Let me see what I posted here. We're looking right now, we can see basic materials. You notice how the velocities rolled over here. You notice trend draining out. So globally, basic materials are looking really weak. And again, that's part of the reason we're chasing right now a gold top. We are tracing the finish of gold. We feel it's done here, and maybe I'll get a moment to talk about that. You can see the global consumer services. This is an area we're stocking for a short. We've started to build a position. It still needs some work here. It's starting to roll over. It's starting to break down, but we want to be a little bit early maybe on this global short. In the consumer services area because it looks weak. Here's tech. Tech looks very weak, trend rolling over. These are all the global models. So we want to keep an idea, we want to look. Here's an interesting one. Look at the utilities, Utilities are typically a safe haven for pension funds and big money. And I would suggest to any pension funds out there, holders of utilities as a safe haven, you should be unwinding your position in these. You should have already been unwinding your position back here. Once we got right to about here. This would have put you in about April to start unwinding, because you can see once you reach the top of the velocity and close to the top of the Mach line, you want to begin to unwind your position. So you still got time here, but this gave you a lot more time to be able to distribute into any kind of strength. But now you've got not as much time because you see the velocity is rolling over and the trend's breaking. I expect us to get this red line to get down here. So we're going to see some sell-offs here now in the utility sector as well. Now let's just jump around here. Let's go over into the QQQ SPY real quick. What do we got put up here? Got a couple things here. Let's take a look at this. You can see here on the QQQ model, I really like this model a lot. It's acted fantastically for us and has done really well. You can see the trend breaking away here. And you notice how we got the advanced warning. I just was playing around with the mathematics into this model, was doing some work on the studies of it, and wanted to make some adjustments in how we had this developed. And you can see how once we reset this up and retweaked a little bit of the dynamics and the math of the model, you can see how we had an early warning here. So you can see how trend was breaking. We had some time here in early 2025. And then as this continued to break, you can see we then broke. So we're price correct right now. We're breaking out of the V channel, which we will do. Once trend and once velocity leaves the V channel, we will break below it. Now you notice if you go back here, we were coming down into the V channel, right? So we had a bullish cross here. We entered into the what is that? View all your memories. Okay. We entered into the V channel right here. You see that? And we came down right and tested the dot curve here. And you notice how we tested the dot curve. Now, we continued, and right at the dot curve, we were just getting ready for, notice this, the trend to leave it, but we held. And then the trend rose back up into the V channel here. You see, that's our V channel again, this indicator, this indicator. This is a momentum-based channel. So the QQQ weekly now is breaking out of the channel. The velocity is rolling over. This looks ripe. So we're going to watch that really closely. And we can see the same setup. The SPX looks a little bit weaker. Actually, we're looking at the SPY model, that QQQ instead of SPX. And we can see this same kind of idea. You see that tweezer right there. Look at it coming into that tweezer right there on the V channel, right? Tweezing in right there. And the V channel has not risen. It's still down here. So even though I'm talking around, we're talking SPY here, but SPX 4600 down to 4200, we could get, eventually we're going to get down here in the A wave, probably this channel, because the bigger move, this is just what we're looking, but we could go all the way down to flush through what we see in the overall pattern, all the way down into here. So it could get pretty aggressive. So you see we're looking right, velocity rolling over, trend down here. We can't be priced up here. So on the SPY QQQ, we're looking pretty solid there for a continuation in this, and we want to watch how that sets up going forward. Let's jump over here in sectors. I was talking about this over on Twitter. I really like this right now as a short position, and I highly recommend it because we're looking at the RXD. That's China. Let's go to that in a minute. Here we go. We can look at this model of U.S. medical equipment, and we can see the V channel here with the momentum part of it, the MOC, which is, the momentum of circulation. And here's the top of our V channel, the directional. And we can see now we've got a momentum top right here. Now notice that's the first time we've had a momentum top, and this momentum top completed back in October of 23. So if you're in the medical equipment area as a pension fund again, or that you want to be selling out of the medical equipment area and healthcare in general, even the healthcare providers look extremely weak. I don't recommend anything in this area right now, and it could get aggressive because we need a price down here. This is pricing at $25.89 on medical equipment. It could get down to $14.15 here. Now, to break below this, you notice how we've held right on our gate. So this is a developing trade, okay? In other words, this needs to go from open to close below. But the fact the V channel is down here, it's setting up. It's just going to break at some point. It's not quite there yet, but it's coming. Because if you look at here, excuse me, that was the one we just looked at. That's medical equipment. And here is healthcare. So I wanted to look at both medical equipment and healthcare. That's why it looks kind of the same, because it's a bit the same. But you notice on the U.S. healthcare, we got the signal closed right here. So this is now ready to drop down into the V. You notice we had a closed signal here, and they held. But now we got a closed signal here, and this structure is just very weak. So I really just, overall, I like it a lot. So we're looking at RXD here. It still needs to open above here to really start to get aggressive above the line here at about 11. But look at the V channel. I mean, the dot curve's at 22 and the MOC curve's at 43. I could easily see this trade popping up into this range. It could be really nice, this healthcare short. We're going to have to see how it sets up. And look at this now. I just want to show you on the finance, because we've been chasing a finance short as well. Finance is basically everything in this market. And we can see with the market now our finance indicator rolling over. Notice back here, 2022 correction. Notice here, 2020 correction. And look at the trend just rolling right over here. It's starting to get spiky. The velocity rolling over. This is already, we're going to have to see how low this wants to get. You notice our low spike here and then rising back up out of the lows in 2022 as the velocity rebuilt up. And again, back here is the velocity and the trend rebuilt back up also. So finance is something else we're watching very closely. We like it. We're looking at FAS. I've shared that with the members. We're taking a very close look at it. Let's jump into semis really quick. The semiconductor signal went off up here back mid 2024. It has been in a sell-off ever since. Very nice head, very nice shoulder, very nice shoulder. We've already broken the neckline. The dot curve has rolled over again. Notice back here, dot curve rolled over here, and we had the sell-off here. Dot curves rolled over right here. We're within the V channel, so we're priced correctly now, but I'm expecting this to continue to move lower. We can see that the flows are negative, and we're looking at a flow-based model here, and I like that setup. And we can see NVIDIA. Don't be in NVIDIA right now. It's holding because the trend is rolling over, but look at that rollover in trend. Look at that collapse in velocity. Excuse me. And look at that really nice head, shoulder, and the right shoulder. We still got to break a neckline here. They held it again here at 90.67. And if you want, you could draw the neckline out here to 75. This is definitely going to move down to about 60s, I would think, here on the video, and then we'll see what it wants to do. But you notice we've got the dot curve all the way down here, which puts it below this 39.29 price level. Puts it down here at about 40. So there's some really big downside here. You do not want to be long NVIDIA right here. All right, let's see what we've got here. Oh, there's one model I wanted to show you. First of all, let's look at this. You notice the signal's going off here, so that still looks good. I want to see if we can get this signal to go off. This would be a major signal. It has not gone off yet, but that's okay because we can see here on the left side, we have this kind of selling off here. You notice this selling off here with a rally back up. And then the signal went. So we could be really close now to having this signal fire off. And you notice once that signal fired off, look how aggressive that drop was. Then it reflected the rally back up and then flushed out. So I'm watching this particular signal. This is one that I've been watching and developed over a few years now. That really is an interesting model. I mean, I've been working on that one for quite some time. Let's go over here, yields and bonds real quick. I don't like junk. Junk's topped out. Okay, so if you're in the junk bonds, V channel's down here. We're seeing a top out now in the bond sector. And I'll maybe do a report on the bonds ahead, put something together for you, those that are interested in wanting to or want to trade bonds. We do a lot of work within the bond space. We pretty much model every bond within the stream modeling system. And you can see now we've got the breakaway in trend, we've got the velocity rolling out here. The Mooney and junk bonds do not look pretty. So I think we're getting pretty close to setting up. Let's go here into the 10 stocks. Let's look at Meta, Amazon, Apple, and Google. Very important to this. You notice here's our pop out here in those 5 stocks. The trend continues to break. The velocity continues to break. So we want to watch the top 5 here because this is a big part of the market. And that's continuing to break lower. Watching here our artificial intelligence model. This is the Tencent, Alibaba, Cisco, Samsung, IBM stuff, and obviously some of the bigger players here. I like to watch this. That's only 32% of the holdings, but this is an AI-focused ETF, and we watch it very closely, and we can see now that the velocity is rolling over, the trend's broken, and the whole AI trade. And we've got all the different AI stocks. Maybe I'll share those sometime in a report, and they're pretty interesting to look at. So we're pretty much done right there. We got right here the tech stock area, you notice here. Just again, we're breaking, rolling over here. That doesn't look so good. I had an internet model here. Let's see where that is. Well, here's the internet model. This is the internet model. You notice here, velocity breaking, everything coming down. That we're going to continue to watch how this develops. See how it developed out here in 2022. So we'll continue to watch how this develops. I'm not expecting any bounce back up here. I'm expecting this to continue to get pretty aggressive to the downside, and that's simply based according to the overall top pattern in the market. Did I want to show you? Yeah, here, let's look at this crypto model. I shared this the other day. Here's Ethereum, right? And you notice Ethereum now falling right down the trend. It's now broken outside of the V channel. And Ethereum, this thing, look at the rally back up on this side here and then this big collapse. Until the trend reverses here on Ethereum will continue to sell off. So we're going to watch that. I want to watch ETH And I want to see how if this can hold right here. If it wants to break lower, that could be an indicator of what's going to happen with Bitcoin ahead. Riot and all that. I don't know. I think I shared those in my crypto report, so there's no need to look at those right now. Now let's go over here in commodity. I just want to share a few things here. Let's see what I had here. We're looking at, this is where I've been developing out some of these gold trade models. And let's just look at these two and we'll finish the report there. I want to keep it a little bit shorter today. Try to keep it right here in this 20 minutes so I don't bore you to death. You notice here on GDX, we've hit the black line hit perfectly here. I'm saying right now I would be chasing a short the miners, and we've been looking at all those models here on the site. And we're looking at, nugget dust, dust and J dust, but we're also looking at the counter side of those as well. We can see here on GDX a perfect also black line hit here. So we've got it on both GDXJ and on GDX, a topping hit on the black line. I am calling it done over here in that gold trade. So that's it here for today. Have yourself a great continuation to the Easter weekend. Take time for sure to count your blessings and say thank you to Jesus for his sacrifice and fulfilling his destiny that day on the cross. What a day it is when you think of the love he had for us and the suffering him and his disciples encountered into the cruelty of this Babylonian system that we live in. Just a magnificent weekend to celebrate and reflect upon your own walk and your own path with our Lord as we go forward. It's a very important week. It doesn't matter, whether, even if you're not a believer in the Catholic religion, or I should say the Christian religion, not Catholic religion, forget it. It doesn't matter. You can be secular, but I still think it's important that we all remember, because it's really, no matter what religion you are, it's still, from a statistic of events on this world, it's very important. Thanks for tuning in. I appreciate your time, and I'm out of here. Have a great continuation of the weekend. Glenn out.